Hi guys, welcome to Talking Money with Nozi, personal finance made simple. Today I'm going to be answering the question, which companies pay dividends? But first, let me define dividends. What are dividends? Dividends are payments made to shareholders of a company. Dividends can be paid once a year or twice a year or 3 times or 4 times a year. Dividends are a form of passive income because once you buy your shares, you don't need to do anything to earn your dividends. You just keep on earning your dividends for as long as you hold on to your shares. By the way, many people who have reached financial freedom as well as retirees live on income from dividends. So what they did is that they regularly invested their money long ago by buying shares every single month, and their investments are now large enough for them to live on income from dividends to pay for their lifestyles. Second, I want to talk to you about dividend yield, and I want you to pay attention to this part and remember it because dividend yield is very important if you are a dividend investor. I'm going to explain dividend yield using company A and company B as an example. If company A's share price is 1,500 Rand and it pays 30 Rand in dividends per year, whereas company B's share price is 50 Rand and it pays 4 Rand in dividends per year, which company is the better deal? Many beginner investors would think that company A is a good deal because 30 Rand is more than 4 Rand. But the truth is, company B is a better deal because it has a higher dividend yield. Dividend yield is a company's annual dividend divided by the current share price multiplied by 100. So company A's dividend yield is 2%, whereas company B's dividend yield is 8%. What this means is that if you invest 10,000 Rand in company A, you can expect to receive 200 Rand in dividends because 2% of 10,000 Rand is 200 Rand. If you invest 10,000 Rand in company B, you can expect to receive 800 Rand in dividends because 8% of 10,000 Rand is 800 Rand. So a company that has got a high dividend yield will pay you more in dividends. A company with a low dividend yield will pay you less in dividends. In this picture, I'm showing you the dividend yield of Capitec Bank, which is 1.65%. What it means is that if you invest 10,000 Rand in Capitec shares, you can expect to get a dividend of 165 Rand. In this next picture, I'm showing you the dividend yield of a company called Storage Property REIT. The dividend yield for this company is 7.6%. What it means is that if you invest 10,000 Rand, you can expect to get a dividend of 760 Rand. So when you're looking for dividend paying companies, you don't just look at the Rand amount of the dividends. You have to look at the dividend yield so that you can estimate how much you will receive in dividends when you invest your money. So back to the title of this video, which companies pay dividends and where do you find the dividend yield of those companies? Well, I use 3 websites: Simply Wall Street, Share Data, as well as MoneyWeb. I'm going to leave the link of these websites in my description below. Okay, so this is the website called Simply Wall Street. And what I like about this website is that it brings most of the shares in one page neatly, and it's got important information on this one page. And my most favorite feature about this page is the filter. So you can filter by company name if you want the page to list the companies alphabetically. You can order the companies by market size, like how big they are on the market. And of course, if you're looking for dividends, you filter by dividend score, which is what is currently selected. And what you see is the companies that pay dividends. And right at the top, there's a column called dividend yield. Dividend yield, if there's a number there, it tells you that that particular company has paid a dividend recently or it pays dividends. So for example, Spark Group, dividend yield is 4.9%. African Rainbow Minerals, dividend yield is 18.5%. Exaro Resources dividend yield is 22.3%. Just a word of caution here, guys. Please don't rush off because you've seen these huge dividend yields. Please don't rush off to go and buy these shares. You actually need to go and do your research. Like, for example, I researched African Rainbow Minerals, and the dividend yield of 18.5% is not the norm. So this company does pay dividends, but 18.5% is definitely higher than usual. And this happens for several reasons. Sometimes it happens if the share price of the company has fallen. Other times it happens as a once-off. So a company may have perhaps made so much money that they've got a lot of disposable income on hand to pay out a big chunk in dividends. And this is what happened for most of your mining companies. So your materials companies, they produced lots of revenue because the demand of precious metals went up last year as well as this year, and they made tons of money, so they paid out very high dividends. But this is unusual. So don't make a decision based on an unusual occurrence. Another thing is your real estate companies. Have a look at Redefine Properties. This is also an unusually high dividend yield, and this was in fact caused by the share price falling. So the share price of Redefine Properties fell, and this caused the dividend yield to go up. Another thing, guys, you should always think of what's happening in the real world. Remember, real estate has been negatively affected by the pandemic because hotels are sitting empty, office parks are running at below capacity, and even some residential areas. So real estate hasn't been making a lot of money recently, and therefore the high dividend yields are not justifiable based on the income that they earn. So I would tread very cautiously when it comes to real estate. In fact, if you see a high dividend yield, just go and do further research before you rush off and buy a share, because it's a signal that something is going on. Something unusual is going on when you see very high dividend yields. Another thing that I realized about this website is that sometimes the information that they give is not 100% accurate. So for example, Impala Platinum is quoted to have a dividend yield of 10.8%. So what I do is I always double check with other websites. So I will double check with Share Data as well as MoneyWeb. So if I go to Share Data, what I don't like about this website is that the information is not nicely displayed like what you saw on Simply Wall Street. It's a little bit clunky. So to see each share, you click on the alphabet. So Impala starts with I, so you click on I, and there you see all the shares that begin with the letter I. Then you click on Impala. Okay, so this is what you see. What I do like about this website, what I do like about Share Data is that it compares companies that are in a similar industry. So Impala is being compared to Anglo American Platinum, being compared to Sibanye Stillwater, being compared to Northern Platinum Holdings, as well as Royal Bafokeng Platinum. So this is one of the things that I like about this website. So you can see that Impala, which is the one highlighted in gray over there, the dividend yield is 9.9%. So what I do a step further, I compare with what's on MoneyWeb. So MoneyWeb is almost set up like Share Data, where you click on the alphabet, then you select the company by clicking on it, and it says dividend yield 9.9%. So you can see that Share Data and MoneyWeb say that Impala's dividend yield is 9.9%. So I will go with this information from these two websites because they are South African websites, and I consider them to be more accurate compared to Simply Wall Street. So as you can see here, Impala is being compared to Anglo American Platinum, which is 7.2%, Stillwater 11% dividend yield. Northern Platinum did not pay a dividend, so it's empty, and Royal Bafokeng Platinum gives you a dividend yield of 11.7%. But there's more to dividends than just the dividend yield. You look at the dividend yield as a starting point, but this is not where you end. You have to do further research to actually select the companies that you are going to buy. After going through the list of companies that pay dividends and choosing the ones that you are interested in buying, the next step to do is to research those companies and find out if they are really worth buying, because there is more to dividends than just the dividend yield. You need to buy companies with a reasonable dividend payout ratio, with reasonable debt levels. The company earnings have to be growing from year to year, and the company must have a healthy balance sheet as well as good cash flow. Okay guys, so to do your research, after you've come up with a short list of your dividend companies that you're interested in buying, I use an app called investing.com. I showed you in a previous video how to use investing.com, but I don't mind repeating because repetition deepens impression. So what I'm going to do is I'm going to use African Rainbow Minerals. So in the search tab, you're going to type African Rainbow Minerals. There we go. And then scroll to the right up to where it says dividends and click there. Okay, it says dividend yield for African Rainbow Minerals is 13.86%. This is different from what we saw on Simply Wall Street. Simply Wall Street said 18.5%, which again proves that if you're going to use Simply Wall Street, you have to double check on other websites to see if it's accurate. But what I want you to see is the dividend payout ratio. So a company's dividend payout ratio gives you an idea of how much money a company returns to its shareholders compared to how much the company keeps to reinvest in its growth or to pay off debt or just to add to cash reserves. What is a good dividend payout ratio? So generally speaking, a dividend payout ratio of below 60% is sustainable, right? Because you want your company to grow. You want your company to pay off debt. You want the company to have enough cash reserves. You don't want a company that pays out all or most of its income in dividends, because it means it's not sustainable long term. If you are a dividend investor, I'm assuming that you are a long-term investor, so you need the company to grow over the long term. So you don't want it to be paying out a huge payout ratio, because it means the future for that company doesn't look very bright. However, there is an exception when it comes to high payout ratios. REITs, which are real estate investment trusts, they are by law required to pay most of their income as dividends, so more than 80%. So it's not unusual to see a REIT paying out very high payout ratios in dividends. But if a company is not a REIT, be careful of very high payout ratios, because then it's not sustainable in the long term. Let's have a look at whether or not this company has been paying out dividends consistently over the years. So you click on show more until it stops. So you can see that this company has been paying dividends since 2015. They've never stopped, right? From 2015 right up to 2021. And what you can see is that in 2015, dividend was 3%, 2016, 2%, 2017, 8%. And then in 2018, there were two dividend payments. One was 6.98%. The other one was 7.92%. In 2019, it was 7.16 and 9.53. And 2020, 6.77 and 4.33. 2021 March 6.92%, and in September 13.82%. So you can see that definitely these guys have been paying dividends consistently, but you can see also that 13.8% is out of the norm. So therefore you know that this is unusual and you shouldn't expect a 13.86% going forward, because this is not what has been happening in the past. You can see in the past, the dividend varies, but definitely not in the double digits. So this is not usual. Then let's go and look at the financials. Again, we look at the income statement and we want to see total revenue as well as net income growing. And just by looking at this graph, you can see that the total revenue over the years has been increasing. Let's go to the table to have a look at what's going on to the net income. So starting from 2018, net income was 4562. In 2019, net income dropped slightly to 3554. And then in 2020, net income picked up 3965. And a big jump in 2021, 12626. Look at gross margin, operating margin, net profit margin, return on investment. In my previous video, I said the higher these numbers are, the better. And these numbers are quite high, and this is a good sign. Let's look at the balance sheet, which shows us assets versus liabilities. You want a company that is growing its assets and reducing its liabilities. And you can see just by looking that the total assets have actually been increasing. Let's have a look at the table down below. Total equity should be increasing over time. Total equity is calculated by subtracting total liabilities from total assets. So starting in 2018, total equity 25907. In 2019, it increased to 28173. That's good. In 2020, it increased again, 32080. And in 2021, it increased to 4194. Very, very good balance sheet. Then when it comes to these ratio, quick ratio should be higher than 1. And we can see that quick ratio is 5. So it means that they've got enough cash reserves to pay their debts 5 times. And total debt to equity is 3.65%. So they've got very, very low debt levels. This is very good. And then lastly is your cash flow statement. And I said in my previous video, your net change in cash must be positive. And that's what you see over here. And operating cash flow of 159% is excellent. So according to what I've just done right now, African Rainbow Minerals is a very good company. The dividend yield is good and it has been consistent over the years. And the payout ratio is very low, which is excellent. They've got a very good income statement, very good balance sheet, and a very good cash flow statement. That's it, guys. I hope I have answered your questions about dividend paying companies and how to do your research before you decide which companies to buy. If you enjoyed this video, please give it a thumbs up so that other people can find it on YouTube as well. Also, please subscribe to this channel so that you don't miss my notification for my next video where I'll be talking about ETFs that pay dividends. See you next time. Bye, guys.